Hi everyone, welcome back to this week weekly market update. It's been a while, 2 weeks since I have provided my last update due to Chinese New Year was around the corner. So let's come back to the market once again. For today, I will just mainly look into the overall pictures, the overall view of the market itself, and also check some of the 2 or 3 counters on the stocks itself, opportunity to look at. And beside that, also share what is the concerns for the coming week as well. So people who have not followed me, please remember to like my video, follow me, or especially join on my Telegram group, because if let's say I'm too busy to post any weekly market update, I will actually provide update in the Telegram directly. All right, so without further ado, let's see what happened on last week. As we can see that last week, right, on last Friday, down dropped more than 460 points. I think it's a second consistent day of dropping. Mainly is due to they worry on the height of the interest rate. As we can see that if you look at the weekly chart of the 3 major index, right, we can see that they actually close rate. S&P slide around 2.5%, and then Dow slide 1.8%, and then Nasdaq was also losing 4.9% for the weekly last week itself, the overall weeks, right? So mainly, like I say, interest rate fear due to the inflation. Um, of course, another thing is because market is at all-time high. We know that they always market is looking for a reason to to find a reason to for the market to drop. I have shared previously in my Telegram group. I said that watch out. I put some signal in my Telegram group. I said watch out, and 32,000 at the point of time, 2 days constant drop, 32,000, whereby is a round figure for the market to reverse at that point. So it comes with some signal showing at the VIX, showing at the US 10 years treasury rate, the U rate. So we'll look at these 2 chart later as well. So for the coming week, like we say, interest rate is one of the main concerns. Because this coming week, not there's a lot of major economy data is going to release. Non-farm payroll, unemployment rate, a lot. We can see from the economy calendar. There's a lot. Manufacturing employment rate, PMI, manufacturing PMI, ADP, crude oil, a lot. So good news equal to bad news, always the same procedure. So if let's say all this is a good news, good unemployment rate, good non-farm payroll, good PMI, it shows that market is recovered. And when market is recovered, people worry and fear more that will the Fed actually hike the interest rate or not. So we know that over the weekend, this weekend, the House actually passed the 1.9 trillion COVID relief, and right now it's based on the Senate to decide. So right now there's 2 things. One, by right, this is a good news. It should boost the market to go up. But with the interest rate increase, it's actually a bad news to the stock market itself. So right now we shall see which is actually outweighed than each another. But not to forget, this one, right, they are actually looking to pass to the president Joe Biden that's before 14 March. So from today's to 14 March, there's actually 2 weeks for the market to move. So I think market might actually take this opportunity to recorrect a little bit before they actually have found a stable ground for it to go even higher. All right. The market needs some room to breathe. It cannot be just keep continuing to spike higher and higher. Correct? It needs some room to breathe. So from here, 2 weeks when we count back, maybe it actually come back to the 30,000 whole figure, or maybe it actually cover the gap and then it go up again. All right. Will there be a big correction like what happened on the February 220 due to the COVID? I don't see any chances of that. It might actually correct even stronger to the to the 100-day moving average, 200-day moving average, and then it bounced back just nice within 2 weeks. All right, so this is what we shall see later. Okay, so this is the what happened to the coming news. All right, so earnings report as usual. There are still company going to announce some earnings, like Zoom Video, Target, non-storms, all this and that. So if let's say you are holding any of the counter, please be aware. All right, so without further ado, let's go directly into the chart. All right. So chart wise, Dow Jones, like I mentioned, let's clear something. Okay. All right. So house past 1.9 trillion right now. Waiting for the Senate to approve. Next thing, market may continue to go downwards until you get nearer to March 14, as I per se just now. Upcoming fear might be the fear of the interest rate hike. So market may continue to hit 30K whole figure, whereby supported by the 100-day moving average. If the 100 moving average give way, we might see a further deep corrections, and then you might see here first. All right, 29,000 followed by cover the gap. Saw that? All right, so this is a two line we are looking at. Okay, first, second, and then third. Okay, not to forget, when market come down, it come very fast one. All right, when it go up, it take a few days to go up. So this is what we are looking at the moment. Okay, next thing we will be looking at, I've give some sign on, this is important, so I will touch on it first. All right, so this is the US 10-year bond yield rate. I think yeah, all right, so sorry. So this is what I said. I mentioned it on my Telegram group. I think on the 18th of Feb, 18th of Feb, if I remember correctly, 18th of Feb. All right. Uh, watch out on the U bond. Watch out on the VIX. Something is not doing correctly at the point of time. So market really crashed 2 days ago. So right now 1.42 is actually the support and resistance lah. So market close at the support and resistance. Okay, support right now is at the resistance. So if let's say by coming week, uh 10 years use rate continue to go higher and successfully break above last week high, which is 1.56, we shall see 1.7 next. Of course, this is not a very good sign to the economy recover. Current people will actually put more money in the bond instead. They will park there, so the liquidity, the cash in the stock market will reduce. As we can see that, do you guys know that the return, right, for example, let me see, for the S&P returns, I think the dividend yield is only 1 point something percent. If let's say the 10 years yield is higher than that, right, people will put more on the bond itself. All right, they won't go into the stock market. For example, the dividend yield for S&P 500 company in aggregate is only 1.5%. All right, it's only 1.5, and 10-year bill give you 10-year bonds give you 1.42 right now. So which one will you go into? So that's why the market crash down when you go up. This is the reason. All right. So next thing we will be looking at uh dollar. All right, dollar mentions again since last first of 31st of Jan. $90 is a good support area. Right now it's being supported as well. So if let's say it can continue to go even higher, all right, if it continue to go even higher, our first price is 91.50 followed by 92.50. All right, so continue monitor. I will be more at the bullish side for US 30 all along lah, all along. If you have been watching my video all along, I say 90 is a good support. This circle area is a good price to enter. So if you never get this circle area, 90 is also a good price for you to enter. All right, so this is my view on dollars. I know even though that people might say that they might be printing a lot of dollar right now, but when they print the dollar, Joe Biden need to expand the economy, dollar need to spend, commodity go up. So yeah, so that's my view. Next thing I will be giving on VIX. Yeah, VIX wise, see I mentioned on 18th Feb in my Telegram group. Watch out, it's a stable support, and with the rise of US 10 years use, it tells us something. And who knows, it actually go up. So I'm not doing any long or short in VIX. All right, VIX is just a monitoring tools for me to monitor the market. All right, it's a volatility tools. Next, I'm going to share with you guys is on the, I think it's Nasdaq. I think kind of people concern on Nasdaq as well. So Nasdaq wise, right? yes, it seems like the major index is coming down. Same goes to Nasdaq. But my first support is actually at 12,500 because it's quite strong. Technology is quite strong. We shall see it coincide with the 100-day moving average. If it give ways, as usual, we shall look at the next support will be at here. All right, but 200 is quite far apart. 200 is quite far apart. As you can see, it's been so long. Since March 2020, it never even go to 200. So we shall see the correction how fiercely it is. Otherwise, we shall see at 12,000 the whole figure first. All right, I always give a round figure first before it come to the worst off price. All right, 12,000 will be the next. If it give way, all right, if the 100 days moving average give way. Okay, next we shall look at. I've mentioned this before, but I think I didn't share in my Facebook page. It's actually craft. This counter is good. It spike up. So right now I'm waiting for the price to come back to 36. It's a first support price. Because it used to be a resistance. It's a first support price 36, and $33 is actually the pivot point. All right. If we go below 33 and then it give way, we shall see 29 next. All right. So this is what I'm looking at. People who are people who believe in craft actually can put some limit buy order from there. All right. So this is my view on craft. Next is actually CCL. Waiting for the economy to reopen. Travel company have been mentioning long ago if you have been following. So right now, where are we looking at? $18 is a well support price. All right. So not to be surprised if the price fall back to 22. It's still at a support price. It's still good because if the whole market is if the elephant is try to exit from one door, right, the whole market will suffer. All right, the counter will suffer. So ultimately, I'm looking at for CCL to head to 29 first. Come coincide with the 100-day. Weekly, if I'm not wrong, it's a weekly moving average. Yes, it's a weekly moving average, 29. And then with the travel stock is coming back to the market again, I think CCL is a good counter. All right, it's still cheap. To me, it's still cheap. Still can accumulate somehow. Next is on Tesla. All right, I hardly do this kind of big stocks, but one of my friends actually asked me. So since I analyze, then I'll just share my view on it as well. May continue to see a further drop if a 100 days moving average give way. I mean, you put some indicator, you monitor from there. Of course, mine is a very generic indicator. All right, for stop precise price entry, I will zoom in more, but that is more on for the private group. For the public, right? I mean, this is good enough. Just monitor the area which I'm monitoring as. So if let's say 100-day moving average give way, this price give way, then we shall see next. So it's a good price to pick between this second area. All right. Okay. So that's it for Tesla. Uh, Sorry, I got the wrong line. Okay, that's it for Tesla. And then so don't try to buy right now. All right, don't try to buy right now. Like I say, the market needs some brief. It's all coming down, so let it fall a little bit more. All right, get a good entry price. Don't try to rush in. All right, today, let me see what else. Okay, US oil will be the last for today. US oil. Okay, for US oil, right? We are actually at a very so called in between the bull and the buyer. Okay, for oil, I mentioned it's upward lah. Go watch back my video, in my Facebook page or YouTube. Yes, touches 64 right now. As you can see that 64, this price is whereby COVID started. The price start coming down at the point of time. All right, until to very 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 low, even negative. Um, right now it revisit the pre-COVID price. It revisit the pre-COVID price. So in order for the oil price to continue high even higher, right, there must be some reason, right? Reason can be first, economy reopen. All right, travels, airline, cruise, all need oil consumption, even though EV is there, all right, electrical vehicle, clean energy, but oil cannot be removed straight away immediately. All right, so unless economy reopen successfully, COVID vaccines, COVID all gone, then it might even go higher. Or perhaps, those kind of oil producer, they actually cut back their oil. Who knows? But I'm looking at these two. One is economy reopen. Second is the war from the Biden. All right. So if let's say war means that oil, when you come to war, oil is definitely a must. All right. These two news might even spike the oil higher. So right now we are actually in between the buy and the sell. I mean the bull and the bear price. Bull and the bear zone. So when you ask me to long, I might consider after it successfully break out. When you ask me to short, it's a good risk reward. I just put some cut loss here, but ultimately you are against the uptrend, right? You are against the uptrend. Okay, so for me, I don't see any. I don't see myself forcing myself into this counter, forcing into opening a oil positions. I mean, there's so many positions out there, so I will continue monitor, see how it goes, see what candle shot does it give me, and what's the news does it give me. All right, if I want to long, I long way before that. I would long at this price at this time around. All right, so that's all for this week market update. Hopefully you guys enjoy something. Remember to follow my video. I will continue to see you guys next week. Thank you very much. Bye bye.